Christof Rühl, Senior Research Scholar at the Center of Global Energy Policy at Columbia University. Christof, also over the course of the month of June, we had the rate hike scenario come back into focus, with most of the central banks, at least the G7 central bankers, indicating that they're not done yet and that inflation has been quite resilient, and so expect further rate hikes. And most dramatically, the Bank of England gave us a 50 basis points during June. Your thoughts on that side of the equation, the demand side, the macroeconomic outlook for the G7 economies and their pull on the oil markets?
I mean, you know that I'm not one of those who look at interest rates to determine oil prices, or not only at interest rates. So what Mike just said was interesting. Maybe it's time for a role reversal a little bit, because as you know, I've been consistently on the bearish side, and all these forecasts, $200 oil, $300 oil. It's not long ago that people seriously, the Goldman Sachs, the RBS, the energy aspects of this world would engage in that. And now we are here, major events like that don't really move the dial. I think the mistake of many analysts who were too bullish was very simple. It is they treated the oil market as an appendix to somebody else's macro forecast. And somebody else's macro forecast turned out to be too bullish or too wrong at any rate, and therefore the oil price didn't behave as forecast. What really played a role and what was underestimated is on the demand side, that a period of high prices destructs demand, destroys demand, and therefore carries the seeds of price pressure on prices on it. And probably more important, on the supply side, where we had a few months ago this very razor thin safety margins, very little inventories, very little spare capacity. And where now, after the US resumes even SPR filling, after a period of oil prices under pressure, and especially after the OPEC Plus announcements and cuts, we have a much bigger safety margins. And that, together with some other things, explains the lack of reaction, the lack of price spikes to events even as potentially big as a coup in Russia, as a revolt in Russia. So these two things have not gone away. But I do think that the economy is probably in better shape than indicated. I do think that the interest rate cycle, whether it's now one more increase in the US or maybe two maximum, is approaching its peak, its apex. Everybody knows it, everybody looks at that. So despite all the screaming now, even with one or two more rate hikes in this year, the economy has an underlying strength, which has been persisted for a while now. I would go as far as to say, even if we technically go into a recession, like now in Germany, technically in a recession, I don't think you get a plumber or something. It's complete full employment and everything. A technical term to recession just means take 2 quarters of negative growth. Even if we get that in the US, it is not comparable to some boom times with much lower employment and output levels we had in the past.
So given those kind of counterintuitive developments, I mean, this is the challenge that the central bankers have, isn't it? They've got full employment. Their interest rate hikes are not really moving the dial. Inflation is softening, but core inflation is very, very sticky. They may have to go more than what we currently perceive.
They may have to, but they probably will not. I mean, inflation is always, is going to not go down to 2%. I think it is just a matter of time until we all will get used to a world in which inflation is somewhere between 2 plus 2, maybe 2 plus 1.5 or something like that. Given the extraordinary debt levels, given the extraordinary amounts of government spending, given the limited options to tax, given commitments and the use of the electorate, to these large government bailouts, whatever the problem, if it's a pandemic or a war or a recession, I think that we will live with higher monetized deficits, and that means that we will learn to live with slightly higher inflation. And central banks, of course, they have to at some point declare victory, but I don't think that they really will push deliberately the economy into a recession as they would have to if they would have to go to 6, 7, 8% and positive real interest rates on top of that.
I wanted to take the opportunity to talk a little bit about Russia. I know none of us really are in the geopolitical expert box, but you have worked a long time in Russia. You know it well. How do you read the tea leaves on this event that happened recently, the so-called uprising that never continued? Is this big deal? It certainly seems that at the headlines it's a big deal, and yet it's passed like it was nothing. Your just thoughts on reflection, and does it have legacy resonance for the energy markets?
I think it will have a legacy, and it was a legacy slightly different from what most people think. It's not as simple as that this was some conspiracy and then out walks a very weakened Putin. It's not as simple as that. I think, first of all, number one, this was genuinely pretty much the story we all read about now. Prigozhin sort of losing it, hoping for more support than he actually got, putting his troops in march. Putin, apparently, when you look at the TV pictures, slightly panicked, prepared to crash it. Lukashenko and others may be stepping in, negotiating this kind of exit deal. And Prigozhin has been very calm since this. Now, when does a mutiny fail, and when does a failed mutiny profiteers the incumbent? You know, this happens when the two things in place in the case of Russia. One is if the incumbent captures...
Certainly served Erdogan very well a few years ago. When his failed mutiny.
Yeah, exactly. And what is the requirement for that to work? Number one, the incumbent needs to capture the narrative, so control the story. So in Russia, that means Putin and others in his group, we shouldn't always fix on him as a person, need to control the story, saying we prevented bloodshed, cool heads prevailed, that's why the guy got away temporarily, and so on. Number two, they need to crush the mutiny, and with the severest ways possible. And I think Mr. Prigozhin has just painted a huge white crosshairs on his shoulder, on his back. And I think that...
This Christmas, I'd be surprised.
I think he will be, yeah, we should expect him to be killed. It's not clear when. And some other measures to be taken to degrade him, because it is essential, as I said, to make clear the consequences for everyone. But this particular event, also because it's pretty unique in history. You know, bloodshed has been avoided the last minute. Normally, they always step to the brink and then one more. But in this case, they step back from the brink. I think that might, in the short term, actually strengthen the current regime, in the sense that it takes Putin a little bit, puts him under pressure internally, but there's nobody immediately willing to step up for it. And if the war if there's no breakdown, then in the short term, the public will also step back a little bit from fighting each other too much. And they will say, okay, the most important is that we remain cool under pressure and prevent the empire from breaking up. In the longer term, if you, as me, believe that the Ukrainians will probably be capable of making some, in the longer term, let me just say, it depends on what happens on the battlefield. If you believe the Ukrainians will make a breakthrough, Russia will come under such pressure that we should expect regime change, one form or another.
Just to follow up on that, Christof, another big event this month, or in the month of June, in your home country of Germany, was the declaration of a new security policy. Essentially, Germany re-engaging the world with a front foot forward on security posture. Your thoughts on that and what it may mean for Europe?
Germany engaging the world in a front foot forward posture.
Yeah. Well, they made a very significant policy change during the last few weeks regarding its engagement.
Well, it wasn't the last few weeks. It was announced after the invasion of Ukraine. It's basically implementing what happens there. I think, given the state of the German society, this will be a gradual shift. Too slow for many, certainly too slow from a Ukrainian perspective and other hawkish countries' perspective. And still, I think that a majority of people here in their hearts hope that it will not be necessary, but their heads tell them that the world has become so unpredictable that they will, have to spend more than 2% on the army. But it's not a really big shift. It is more that the people in power, both the Greens and the Social Democrats, were the ones who for a long time thought you could rely on Russia, on this energy partnership and this gradual change through trade. And now they have to be a bit more on the hawkish side to compensate for this very obvious error, which they made.
I wanted just to get your thoughts on the outlook. We had a story on our digest today of the Americans meeting the Venezuelans in Qatar, of all places. We've got Iran would appear in talks with the US again, and also moving as much oil as they possibly can, I think, at this stage, and the Russian oil continuing to get to market, that these very big players in the oil markets, they're not marginal characters like Guyana, obviously Russia, Iran, and the potential for Venezuela to return. Your thoughts of where they are coming into this more than expected supply piece at the moment and going forward?
I think it's actually a very simple principle at work here. And the world has overestimated demand and is slowly sort of coming down to that. And demand figures will be downgraded over the course of the year. And demand, of course, is a function of global economic growth. Simple. But supply is a little bit different because supply can be adjusted much faster than demand, which moves very slowly. And we shouldn't pretend that the oil market is an entirely free market where supply only depends on what is produced and what kind of random weather shock we get. And this is where the in quotation marks beauty of the Saudi cuts comes in. If they maintain they are now, again, they have the lever. They can, in this picture where supply turns out to be slightly bigger than expected, as analysts agree, they have a very simple way of regulating supply, knowing what demand is going to be and knowing that demand cannot react very fast to that. And so the answer to your implicit question, what happens next month, and so if they really want higher prices, here's a chance to get it very easily, and that's what will happen.
Christof, last word for you, your thoughts and outlook for the summer period.
I mean, just generally speaking, I think broadly flat with a light uptick. I want to flag two things. One is there is an enormous risk remaining from the war side that something goes wrong in Russia, or that decisive changes in the battlefield lead to political consequences. And as said this many times before, I would say it again, I would not put it behind the current Russian government to generate an oil price crisis if that helps them in other aspects. So that's one big risk. I agree with Mike. I would not read anything into a paper trade going here or there because we know that they don't determine the direction of travel. They like us, try to figure out where the train is going.
Well, the physical traders also go on holidays.
No, but I mean, oil will still be needed in the holidays more than before, at least in the transport sector. And, money staying at the sidelines, the only thing it does is less useful arbitration and therefore generate probably a bit of more potential for volatility, but in a strange night. But I do think that as the Saudi cuts bite, as the US inventories continue to decline in the midst of driving seasons and SPR reversal, and as the financial trading takes place there and in London generally, we will see an upward drift over the summer. Maybe not very dramatic, but for now it seems this constant declines may have reached their bottom, and then in the fall we'll have to reassess.